Welcome to Burlap Teachers. Enjoy the video.
In this video, I will explain how to do ledger entry. We'll start by understanding that a ledger is a book or collection of accounts where financial transactions are recorded. It helps organize all your financial data. You'll learn to classify accounts into categories like assets, liabilities, and equity, which is crucial for proper recording. Remember, every single transaction impacts at least two accounts, following the double entry system. Now, let's dive into the core of ledger entries, debits and credits. It's essential to know that debits increase asset and expense accounts, while decreasing liabilities, equity, and revenue. Conversely, credits increase liabilities, equity, and revenue accounts, and decrease assets and expenses. We'll use simple T accounts to clearly illustrate how these debits and credits affect each account, making the process much easier to grasp. Once you've recorded transactions in the journal, the next step is posting them to the ledger. This involves transferring each debit and credit from the journal to its corresponding ledger account. For example, a $500 cash payment for rent would be credited to the cash account and debited to the rent expense account in the ledger. Accuracy is key here, so always double-check your amounts and account names. Finally, we'll balance the ledger accounts. This means finding the difference between the total debits and total credits in each account to determine its final balance. After balancing all accounts, you'll prepare a trial balance, which lists all ledger account balances to ensure that total debits equal total credits. This step is crucial for identifying any errors before preparing financial statements. Also, remember to check the description for a link to the Echo Dot smart speaker and other great deals.
Thanks for watching. Consider subscribing if this video helped you.